So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to talk about iron butterfly management. Close in full or just the inside legs. So many of you guys who follow us and follow the trades that I do a lot of iron butterflies. I love doing them. We talked about them in detail about why we like them as straddle synthetics basically, and then the ability to buy the outside legs for risk protection and margin protection for our account. And now the question becomes, when we get into a position that ends up hitting a profit target, what do we do? Do we close the full position or do we close just the inside legs? Many people who are Pro and Elite members and follow the trades that I will do both of these. And it really just depends on the situation. And we're going to talk about that here in a second. But I will sometimes close the entire position in full. Sometimes I will close just the inside legs. And I kind of flip back and forth between doing this. Now, it's not that I just flip a coin and I say, okay, this time I'm going to do, close the position in full. And this time I'm going to close the inside legs. There's actually a logical process to how we do it. And there's a reason why we would choose one over the other. So when it comes to closing an iron butterfly, what I look at specifically is the value of the outside legs or the outside wings. That alone will determine whether I choose to close the position in full or just close the inside legs. So for example, if we are trading an iron butterfly and we sell it for, let's say, $100, and now the iron butterfly is worth, say, $50. Maybe it reached a 50% profit target for us, and we're going to look to close the position. Well, if I look at the value of the outside wings of that iron butterfly, and I see that those outside wings are not worth anything, maybe they're worth a penny and it's just a placeholder there until expiration, well, then I know that all of the value of that $50 is tied up on the inside legs. And so by closing the outside wings, if I were to get filled on the position, which is still a big if, I'm not gaining much from that. I maybe take in $1 of credit for selling back those outside wings. And then after commissions, I maybe I'm only left with a little bit of money, a couple quarters, or, if you trade on Robinhood or some of these free brokers, you only get $1 for doing it, right? So it's not really worth it. And you still got to fill those positions. If they're worth $1, they're worth $2. In many cases, I'll leave them on, let them expire worthless, and I'll just simply close the inside strikes because most of the value or all the value is tied up on the inside strikes. There's no reason to force ourselves to fill these illiquid outside options that are not worth anything anyway. So what I'll do is I'll leave these on, and I generally call them our little lottery tickets. If the market does blow up or if aliens invade Earth, then these things will go bananas and will, pay out huge. That generally does not happen. I've only ever, I think maybe closed a couple of these once or twice, or maybe even less than a handful of times before in the past. And it has not been major outsized gains. Sometimes they go up, $50, you can close them out for extra low profit, but it really doesn't happen that often. So we just leave them on because they're not hurting our portfolio. They're, helping reduce black swan risk, if you can consider it that way, but it's just not worth it to close them. When I look at those outside wings, and if I see that those outside wings have a lot of value left in them, say over $5, they're worth $10 or $20, or in some cases still worth, $40, $50, or have moved a lot, then I will definitely close the entire position. Because I know that if I can close all the wings and all the strikes together, I'm still left with a $50, kind of value. And that's at my profit target after I close everything, then I'll do everything in full. So again, to me, the biggest determinant for making this decision is the value of the outside wings of this iron butterfly. If the value of the outside wings is a couple pennies, I'll probably just close the inside strikes, leave the outside wings on to expire worthless. So hopefully this helps out. If you have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.